Bitcoin has been on the run recently with a 1-year return of over 130% and currently on track to reach $100,000 by the end of this year. Last I checked, the price of Bitcoin was around $90,000. And I know that when it comes to investing, crypto coins have been heavily debated on whether or not they're legitimate investments. So regardless of what you believe when it comes to crypto in general, I did want to go over a few different crypto ETFs that have had a lot of momentum recently and could potentially continue climbing higher into the next few years. Starting with the first one, which is FDIG, or the Fidelity Crypto Industry and Digital Payments ETF. Now, what's unique about this one is that it actually doesn't hold any crypto coins in its portfolio, but it does hold the companies in the cryptocurrency and blockchain sector. So you'll find in its top holdings, there's Coinbase, Mara Holdings, Riot Platforms, and other similar companies. So as crypto coins like Bitcoin and Ethereum rise, naturally the companies in this portfolio will climb as well. Now, something I really like about this ETF is that it is a Fidelity ETF, and with that comes lower fees. It has an expense ratio of 0.4%, and comparing it to other funds that we're going over today, it's actually quite low. Now, of course, as we've seen, the crypto market has been rallying, so this ETF has had a lot of momentum recently. Over the 1-year time frame, it's up just around 110%, and just in the last 6 months, it's up nearly 48%. So this ETF could definitely keep hitting its all-time highs as the cryptocurrencies continue to move up. And remember, this ETF does not hold any cryptocurrencies in its portfolio, which brings me to the next one called GDLC, or the Grayscale Digital Large Cap ETF. Now, for a cryptocurrency fund, this ETF is actually fairly old. It's been around since 2019, so just about 6 years old. And it's a lot larger of a fund as well, with an AUM of about 700 million. Now, what's interesting about this fund is that it does hold specific cryptocurrencies, but it's really not that diversified. As you can see in the portfolio, it has an equal weighting of Bitcoin, Ethereum, Solana, Avalanche, and Ripple. So very concentrated on those 4 coins, but it's also had a lot of momentum this year. It's up over 174% over 1 year, with a 6-month gain of just about 96%. So definitely a very fast growing fund in markets like this. But the number one thing you have to keep in mind with this ETF is its expense ratio. It's currently at 2.5%, meaning for every $10,000 you put into this fund, you're paying about $250 in fees every year. So in my opinion, it really depends on how bullish you are on the crypto market for those fees to really be worth it. Like if this fund potentially generates on average double-digit returns, or in this case, triple-digit returns, then paying that 2.5% might not matter to you, but regardless, those fees are still pretty high. So let's look at something a little bit lower cost in terms of fees. This takes us to DAPP, or the Van Eck Digital Transformation ETF. So this one requires a lot less in fees. Instead of 2.5%, it's only a 0.5% expense ratio, so you're saving a ton more in fees. Plus, its returns have been just a little bit higher recently. Over the 1-year time frame, it's up 181%, and just in the past 6 months, it's up 78%. But this one does not hold any crypto coins either, and instead holds some of the top crypto and blockchain companies like MicroStrategy, Coinbase, Block, and Riot Platforms. It's also a little bit smaller of a fund as well. Its current assets under management is around 183 million. There's also a couple other crypto ETFs that I definitely wouldn't recommend that are honestly just kind of goofy, like the LMBO fund. Its ticker symbol is literally LMBO, which I'm pretty sure comes from all the crypto memes about buying some crypto coins with the hope of being able to buy a Lamborghini shortly after. And this ETF is probably one of the riskiest investments you can make because it's a 2x leveraged crypto fund, as if crypto isn't volatile enough already. So definitely not something I would recommend at all. And then there's REKT, or REKT, which is actually an inverse crypto ETF. So if you were bearish on the crypto market, this would be a way to short it. And again, not an ETF I would recommend. I just wanted to show you some of the funnier ones. Now, you don't have to listen to me, but I definitely don't think that these ETFs should take up the majority of your portfolio. But I really do think that investing in ETFs like these are a great way to get exposure in the crypto and blockchain markets. So let me know what you guys think of these crypto ETFs or just cryptocurrencies in general, and I will see you all next time.